Hey everyone, just want to provide an important update on the economic situation in the United States as well as our market technicals. So we had two really important numbers come out on Friday. First, we had non-farm payrolls hit at 8:30 in the morning. The number was actually higher than expected, so more people are working. That could generally be viewed as a good thing, except this market's a little bit worried about inflation and if too many people are working and getting their paychecks and continuing to spend money, that does not bring inflation down. But there was a silver lining with that number. Hourly average earnings actually went down, and those numbers were also revised lower for October and November. While people are still working, there's not that wage spiral that the Fed is really afraid of that can really increase inflation. So initially the market reacted well to that and then was selling off until 10 a.m. hit. At 10 a.m., we had the ISM services PMI number come in. That came in at 49.6 versus expectations of 55. So it's a huge miss, and it's the first contraction reading that we're seeing since May of 2020 during the height of COVID. That's actually an extremely important number for the market to bring down, because the number one spot where we're seeing inflation continue to rise has really been in the services sector. The CPI numbers over the course of the last couple months have really shown that good inflation has deteriorated and come back down. It's services inflation, which also includes housing, that has been very sticky. So that number coming in much below expectations really helped set this market on fire on Friday. That led to a big technical breakout. The SPYs were able to clear that area of resistance between 385 and 387 that my team and I have been closely looking at. And we finally broke out of a 13-day consolidation. What happens next? Well, there's a lot more resistance that this market has to battle as it works its way up. Can we continue? Maybe. We've got a lot more important information that's going to be coming out. On Thursday of this week, we've got the December CPI that's going to hit. That's going to be a number that the market's going to be paying close attention to. And then starting on Friday, we have the beginning of the all-important earnings season with the banks beginning to report. This earnings season is going to be extremely important. A lot of market participants are really expecting economic deterioration to begin to show up in earnings reports for companies. Will that happen? I'm not sure. The expectations are certainly pretty bearish. Myself, I'm a little bit more on the bull side of things. One of the main reasons why I'm still feeling a little bit bullish, even though most major sell-side analysts are really bearish for the first half of the year, is because of the deterioration in the dollar. The dollar peaked at the end of September, and since November, it's been on a steady downtrend, getting hit especially hard on Friday when those economic numbers got hit. The dollar's come down, and a lot of the most major companies in the S&P 500 and the NASDAQ are multinational companies, like Microsoft as an example. We've seen Microsoft over the course of the last couple of quarters warn on their expectations based on FX concerns. Well, if the dollar is able to continue to weaken, that can help support these important multinational companies. And we could go into an earnings report where expectations are really low. Maybe companies are able to just meet expectations or even beat expectations. And if that happens, it could really set off some fireworks. So certainly a lot more ifs out there, but we're continuing to see data that is supporting the deterioration of inflation while the economy is kind of humming along. People are still working. Maybe we're approaching a little bit of a Goldilocks scenario where inflation can continue to come down, but the economy does not go into as big of a recession as people might expect.